Welcome to all of you. Today we are going to discuss a leave salary encashment. Before this, I have uploaded one lecture on income from salary, basic concepts and gratuity concepts. Now, furthermore, today's topic is leave salary encashment. Now, in leave salary encashment, this is basically related with the leaves which you have not availed during your lifetime period of your service, which is accumulated year by year and at the time of retirement or during continuation of service as and when required, employee can avail the benefit of leave salary encashment. Now, in this case, there are so many various alternative options are available. Like you have seen the chart of this leave salary encashment. That is, case one is during continuation of service. Like when you are in a job and you need funds, so you can avail this option, that is leave salary encashment. That means the leaves which you have not used during your service, that can be encashed and that can be used for your need. Second case is on termination of service, or we can say on completion of service. So after completion of service, there is again whatever leaves credit available at your account in the whole tenure of your service or job, that leaves may be encased, right? So if you are a government employee, that is a case B, and if you are a non-government employee, that is case C. And the last case is the case D, which is when the employee is not present after death of the employee, the whole leave salary encashment amount has been paid to these legal hires. That is a case D. So now we'll start with the discussion case A. That is when a person is in continuation of job and due to the need of funds, he or she encash his leave salary during the service, then that amount of leave salary encashment is fully taxable, whether he is a government employee or other employee, that means a private employee. Now the case B is when leave salary is received by a government employee on completion or termination of service. So on completion or termination of service, whatever amount a government employee received as a leave salary encashment, that is fully exempt under section 1010 AA subsection 1, right? So if you are a government employee and you are receiving a leave encashment salary, the on completion of your job or completion of your service, whatever amount you are getting, that is fully exempted. Now the case C. Case C is when the leave salary received by a non-government employee on termination of service. So here we need to understand, if a person is a private employee, then he need to understand how much amount is taxable under the leave salary encashment. Now in this case, what we have to do, we have to identify or 3 or 4 categories, out of which the minimum is to be exempted under section 1010 AA, right? So for that purpose, we need to identify, first point as you can see in a slide is actual amount of received as a leave salary. Whatever amount of leave salary actually received is the point A. Point B is rupees 3 lakh, that is a maximum permissible exemption limit. Point C, that is 10 into average salary per month, and the average salary he is receiving at the end time of retirement or at the time of termination into 10, right? And the point D is to the maximum of 30 days, normally taken as 1 month average salary for every completed year of service, subject to the direction of actually lived availed during the tenure of service. Now we need to understand what is the exactly meaning of this point D. So the point D is saying that the leaves given by a particular X company to an employee, right, in during 1 year. So whatever leaves he has taken and the remaining leaves he is not taken and accumulated year by year, that whole leaves can be taken as a total leave available. But there is a one exemption one exception, that is the maximum leaves allowed in a year should not be more than 30 days. So if for example company is giving him a leave of 45 days, but as per the calculation of leave salary encashment, what we are considering, we have to consider only 30 days, not more than that, right? And for that purpose, the completed year plus leave salary, leave actually taken in the terms as you can see in a formula academically, into average salary per month. Now here the average salary means basic plus DA plus commission as a fixed percentage, right? And DA should not be formed, retirement benefit should not be included. If the DA is under term of employment, then it should be taken in the calculation of salary, otherwise it should not be calculation. And for the calculation of completed years, we have to ignore the fraction. Suppose for example the person completed 10 years 11 month, 10 years 9 month, or 10 years 4 month, the number of completed years should be round off to 10 years only. Now the case D is, if the leave salary is paid to the legal hire after the death of an employee, right, then the whole amount of leave salary is not taxable as per the rules, right? So this is the basic calculation. Now another thing is that is called pension. So pension means when a person completed his job or completed his tenure, he is getting pension. That is called a periodical payment received by an employee after his retirement. But sometimes an employee or an employer allows that to withdraw a lump sum amount of his total periodical pension. That pension is known as commuted pension and uncommuted pension. If the person wants that he needs a cash requirement, then he can commute his pension and take lump sum amount from the organization in respect of his pension. So there is another treatment you can see in a chart, that is the pension. Pension in case of uncommuted pension is case A, and if the pension has to be commuted, uncommuted pension means if a person is getting his pension every month on a as per the rules of employment. And the second is commuted pension. Commuted pension means the due to the requirement of cash or due to the urgency of cash, a person commute his pension and take a lump sum amount. So in this case there is another category, that is if the person is a government employee, that is case B, and if the person is non-government employee, then again there is two case created by the income tax act, that is if the assessee is getting gratuity, case C, and if assessee does not get gratuity amount, that is called case D. So we need to understand in case A, that case A is uncommuted pension, that is fully taxable as per the government rule whether the person is government or non-government employee. Now the case B is saying that commuted pension received by government employee. So whatever pension, commuted pension received by a government employee is fully exempted under Income Tax Act 1010A, right? So if a person is government employee and due to the cash urgency he commute his pension. Commute pension means taking lump sum amount in respect of pension, right? That is fully exempt from tax. Now the case C is that if the person is non-government employee, right, and he is getting a gratuity, that is, now in this case whatever commuted pension is he is getting, one third of the total pension is exempted, right? So very simple calculation. Suppose for example if I am a government employee and I am getting a gratuity amount also, so in that case if I commute my pension and I got 15 lakh rupees as a commuted pension amount, lump sum amount, now one third of the total pension is exempted. That means out of 15 lakh, 5 lakh is exempted, and rest 10 lakh I have to pay tax on the 10 lakh rupees. Now the case D is saying if the person who is not getting the gratuity and he commute a pension and he is a non-government employee, then in that case one half of the pension, that the same case I am applying, that if I am a non-government employee and I am not getting the gratuity also, and I have commuted my pension and the total amount of commuted pension is 15 lakh rupees. Now as per the rule, one half of the pension, that means 7.5 lakh rupees, is exempted under section income tax act, and rest 7.5 lakh I have to pay tax accordingly as per the government rules, right? So here the pension is clear. Now what happen after these basic things, we need to understand the allowances also. Now allowances means when the government is or the employer is paying something to its employees apart from the basic things like salary, bonus, fees, commission. Apart from these things, the employer is giving some kind of allowances. This here you can see like house rent allowances, city compensatory allowance, medical allowance, tiffin allowance, education allowance, hostel allowance, truck driver allowance. So there are n number of n category of allowances where a person is getting allowances, right, in terms of cash. Now, for the determinant of allowances, there are categorization that there are few allowances that is fully taxable. There is no foundation whether you are using it or you are not using it, but it is fully taxable. Say for example, these are few list: city compensatory allowances, the allowances which is given by an employer to employee to meet the personal expenses due to the rise in inflation or rise in a standard of as per the cities. Tiffin allowances, medical allowances, servant allowances, non-practicing allowances, especially given to doctors, CAs, lawyers, warden or proctor allowance, deputation allowance, so entertainment allowance. These are the allowances that is fully taxable. It doesn't matter whether you are using, you are utilizing the amount of that allowance or not. So these are fully taxable. Now the most important allowances, that is called house rent allowance. So house rent allowance means when the employer is giving you special amount as in the name of house rent allowance for getting a house and for the residential purpose. Now what happened in that case, that is the tax statement should be likewise. Minimum should be exempted from the tax. First is actual HRA received. Whatever HRA house rent allowance is received by the company, that is called actual HRA. And the second is an amount equal to 50% of salary when you are residing in a metro city, or 40% of salary when you are residing in a non-metro city. And the point C is the excess rent paid over 10% of salary. So here what we need to understand, we have to do certain calculations. Like for example, if I am an employee of an X company and I am getting house rent allowance, so what the actual HRA received from the company, I have to use the it in first point. The second point is the actual amount, it's the amount which is equal to 50%. Suppose for example I am residing in a Mumbai, so I have to take the amount 50% of my salary as a point B. Or if I am residing in a non-metro city, say Bhopal, Indore or Jaipur, so I have to take 40% of salary. Now the point C is excess rent paid over 10% of salary. So in point C, whatever actual rent I am paying minus 10% of my salary, the difference amount should be taken over here. Now here the salary means basic salary plus DA under term plus commission as fixed percentage of turnover. So here these are the basic treatments we have to do under house rent allowance. Now take an example. A very simple example is that, for example, the Mr. X is a resident of Ajmer. Now Ajmer is a non-metro city, so we have to apply the concept of 40%. Receives 48,000 basic salary, and he gets 4,800 as DNS allowance and 7% commission. Now these three things, basic salary, DNS allowance and commission, we have to include it in his uh, salary. Now he is getting 6,000 as an HRA. So 6,000 is an HRA, and he pays the actual rent is 5,800 house rent allowance, right? So here we are calculating the amount. As you can see, particular details and amount. House rent allowance actually received is 6,000 less minimum. So minimum point A is actual amount received, that is 6,000. 40% of salary, that is the salary is 48,000 plus 4,800 plus 7% commission, that is 6,020 of 86,000. That is total salary is 58,820. So here is my actual salary. So 40% of 58,820, that is 23,528, and the rent paid minus 10% of salary. So rent paid is 5,800 minus 10% of my salary. 10% of my salary is 5,882. That means there is no excess rent paid over 10% of salary. That means it is nil. So whatever is minimum, that minimum is nil, that is 0. So 0 is exempted. That means actual HRA minus exempted amount. The remaining is taxable HRA. So this is the way. And house rent allowance is exempted under section 1013A. There are some special allowances also, like travel or transfer allowances, daily allowances, conveyance, helper, assistant, right? These are the allowances which are depends on a actual expenditure. Say for example, if I am getting an uniform allowance of 1,000 rupees and the actual expenditure incurred is 800 rupees, so remaining 200 is taxable, right? Tax statement in aforesaid allowances is a minimum of the following should be exempted: actual amount received or actual expenditure, right? Now there is some more allowances, that is children education allowance. So this education allowance is exempted up to 100 rupees per month per child, up to 2 child maximum, right? And the second is children hostel allowances. This hostel allowances limit is 300 rupees per month per child, up to maximum 2 children. If the person is having 3 children, so deductions or exemption should be made only up to 2 child only. Truck driver's allowance, though if the person is a truck driver, then the whatever allowances he is getting from his employer, that 70% of allowances is exempted, or maximum 10,000 per month. So this is the way. If the person is a transport in a transport business, so expenditure minimum, that is actual amount received, or 3,200 per month. So these are few allowances where the calculation may be made separately as per the rules. Now, allowances to government employees outside India. If the person of government category is living outside India, right, then in that case assessee must be government employee, citizen of India, and working outside India. This condition should be there. And whatever allowances paid to the person, that category of person, it is fully exempted. Allowances received from UNO, that is exempted, not taxable. Allowances to High Court judges, Supreme Court judges is exempted. Now the most important thing is perquisites. So perquisites here means when the company or employer is giving you some additional benefits, not in terms of cash but in terms of some facilities. Say for example, if the company is giving you house for living, company is giving you motor car, company is providing you educational facility, company is providing you say contribution to your funds, company employer is providing your medical facility, right, club membership fees, your servant fees, your electricity payment, that all this comes into the category of perquisites, right? Now when we talk about the perquisites, we need to understand the categorization of an employees also. That is, if a person is a specified employee or non-specified employee. So specified employees की categories that include if the person is a director of employee, right, or if the person is having substantial interest, that means he is holding more than 20% of voting powers in a company, and if the person whose aggregate salary is 50,000 per month, or including all taxable and monetary benefits. Now there are some few exempted perquisites also, that is tea and snacks provided during office hours, lunch or food that is provided at a working place, recreational facilities provided at a working place, or goods sold to an employee if an organization is a manufacturing organization is supplying providing goods to its employees, right, at a concessional rate. Conveyance facility from office to home and home to office, that is exempted. Training to its employees, it's exempted. Services rendering outside India is exempted. Contribution in particular pension scheme, superannuation funds is exempted. Right, such kind of things like basic is exempted. Now the most important thing is valuation of rent-free unfurnished accommodation. So rent-free house, that means if the person is providing you or employer is providing you a house for residential purpose, that is so the valuation of that house has to be made, and that value has to be taxable and is to be added into the your gross salary, so that the tax slab or tax bracket should be increased. So in that case, if the person is central or government employee, that in that case, the as per the government rules, whatever rent is decided by the government is charged under in the taxable salary. If the person is an accommodation is provided by government to an employee or serving on deputation, if the person or if the employee is sent to a deputation, then two most important things we need to understand is the city in which accommodation is provided. This is the most important thing in income tax rent-free accommodation calculation. Which city is considering that if the city is having more than 25 lakh population, if the city is having a population bracket of 10 lakh to 25 lakh, and the city is having population bracket of below 10 lakh. So if the population is above 10 lakh, then 15% of the salary is to be valued as a rent-free house. If the city population of city is in a bracket of 10 lakh to 25 lakh, then the salary is 10% of the salary, and below 10 lakh population, then 7.5% of the salary is to be calculated as a valuation of rent-free house. Now for the purpose of salary, here we includes basic plus DA under term plus bonus, commission and all taxable allowances by whatever name called. So this is called basic salary. Now in case of another employee, that is private employee, now we need to understand that three things. The first is the consideration of city, in which city. Then the second is accommodation. Accommodation is owned by employer or accommodation is not owned by the employer. Say for example, if there is a company who purchased flats for its employees, that is called accommodation is owned by the employer. And another case is if the company is not having its own flat, company has taken flats on rent, and the rent is paid by the company, and the particular flats is given to its employees for the residential purpose. So here there is a two case. So in the first case, if the accommodation is owned by the employer, in that case, if the city is having population more than 25 lakh, then 15% of the salary of that particular employee is treated as a valuation of rent-free house. If the city is having population of 10 lakh to 25 lakh, then 10% of salary, and if the population is below 10 lakh, then 7.5% of the salary. Now in the another case, if the accommodation is not owned by the employer, the company has taken flats on rent and provided to its employees for the residential purpose. In that case, actual rent paid by the company or employer or 15% of salary, whichever is minimum, is treated as valuation of rent-free house. And the salary meaning is basic plus D under term plus bonus, commission, fees plus all taxable allowances. This is the basic simple meaning of valuation of rent-free house. This is the one practical example, that is the basic salary of Mr. Chauhan is 5,000 per month, education allowances is 500 per month for 3 children, fees 5,000 per annum, entertainment allowance 1,000 per month, DA 3,000 per month, bonus 10,000 per annum, and professional tax is 2,000 per year. 60% of DA is forming retirement benefits. Now we have to make a calculation for rent-free accommodation of Mr. Chauhan. It is the employer owns such accommodation and the employees hired such accommodation in 900 rupees per rent. So this is a solution. Here you can see the basic salary calculation is basic salary plus bonus plus fees Now, for the purpose of DA is 60% we have to taken into consideration. Entertainment allowance is 12,000 and education allowance is 3600 taxable allowances. Now, the total salary is 1,12,200. Now, the calculation is like, if the accommodation is owned by the employer, then the particular person is residing here in uh, the city, that is 50% of salary. So 15% of salary, that means 122,112,200 into 15 upon 100, that is 16830, or hired by the employee, that is actual rent is 900 into 12, or 15% of salary. So minimum is the value of taxable perquisite, that is 10,800. And how it comes? 900 into 12 months. Here is valuation of rent-free accommodation, furnished accommodation. If the house is provided by the organization, at the same time some furnitures or some other accessories is also to be provided, then in that case there is another two categories. If the particular furniture is uh, purchased by the company and provided to the employee, then the 10% of the original cost of depreciation. And if the particular furniture is provided by the company on hiring basis, then the actual rent or actual hire charges payable by the employer is get added in the valuation of rent-free unfurnished house. Now this is the valuation of motor car. When the car is provided by the company to its employee for the purpose of official, personal, or both. So here there is a very big categorization of calculation of motor car. Now in this case, there is, if the car is owned and maintained by the employer, that means the company, and then we need to identify the uses. If the particular car is uses for only official purpose, then it is not a perquisite and it is not applicable. If the car is used for a personal purpose and the whole cost and the car is maintained by the company, in that case the actual maintenance cost plus the depreciation amount of the car is the taxable value and is added into the salary of an employee. Right. Here M1 means the maintenance cost and D2 means the depreciation amount. Now, if the car is used for both the purpose, then rupees 1800 for small car and rupees 2400 per month for the big car. Now, here small car means the car which is having a capacity of 1.6 liter or below, and the big car means the car which is having a capacity of 1.6 liter or above. Now, if the car is owned by the employer and car is maintained by the employee, that means the maintaining cost is paid by the employee. Then, if it is used for official purpose, it is not a perquisite. If it is used for a personal purpose, then the depreciation amount is the only taxable amount. And if it is used for both the purpose, then if the car is a small car, 1600 per month, and if the car is a big car, then it is 900 per month. And the third categorization is if the car is owned by the employee, car is in the name of employee, and the maintenance cost is also paid by employer. Then, if the office purpose, that is not a perquisite. If it is personal purpose, only maintenance cost is the taxable value. And if it is used for both the purpose, then 1800 for a small car and 2400 for the big car, plus 900 per month for the driver charges also. Right. And if the car is owned and maintained both by employee itself, then it there is no consideration, that is not a perquisite. Now there is another concept of valuation of perquisites in respect of free education, that if the facility is provided to employee itself, that is not taxable. If the facility provided to the family members, then There is a case if the institution is owned by the employer, if the company is having its own education institute and the family members or the children of an employee is providing education to its own institution, then subject to 1000 rupees per month is exempted. Above that 1000 rupees is taxable. If the uh, reimbursement has to be made to the employees for the education facility, then the cost of such education similar institution shall be taxable. In case of free meals, perquisites, if the tea, snacks, or general things provided at office hours is exempted. If in a remote area, that is also an exempted. If free meals provided by employer during office hours, then it should not be exceed to 50 rupees per meal. Other than this, if the rupees or the amount exceeds, then the excess amount is taxable. Gift vouchers, anything given by an employer, then if it is in a kind, then not should not exceed 5000 rupees, and if it is in a cash, then there is no exemption in cash. Valuation of movable assets. What if a movable assets kind of laptop or something is provided by the company to its employee, then if it is owned by the employer, then 10% of the original cost as a depreciation, and if it is hired by employer, then the hire charges or the rent charges is the taxable value. Now this is also a medical facility. In case of a medical facility, uh, if it is provided at a government hospital, it is fully exempted. If it is provided at a government or local hospital or authority hospital, then it is also fully exempted. If the medical expenses reimbursed by the company and the treatment has to be done in cancer or TB or AIDS hospital, that is also fully exempted. And if the group medical insurance is provided obtained by the employer is also exempted. Medical facilities provided outside India, that is also in that case also, if the person is providing, then the cost of stay abroad and one care or one attendant is as per the permission permitted by RBI is exempted. Now there is another thing is provident fund. Now in that case, provident fund is a scheme where the salaried class is invested their amount, and the same contribution has to be made by the employer also for the purpose of retirement benefits. So there is various categorization: statutory provident fund, recognized provident fund, unrecognized provident fund, and public provident fund. Now what happened in this case, there are various categorization. Say the SPF is usually maintained by government and semi-government organization. RPF is also maintained by the companies. URPF is an unrecognized fund, and PPF is can be maintained by an individual of any person, and it can be opened with any bank account. Now in that case, the basic treatment of tax is, if in this is a table, you can see there is a 4 column of SPF, RPF, URPF, and PPF, and 1 column is a particular column, that is employer's contribution. Basically in the fund there is a 4 categorization, and the contribution of employer, that means company, the contribution of self, individuals, myself contribution, and the interest amount, and the uh, withdrawal of that amount fund. So in case of an employer contribution, SPF, that is not taxable, URPF is also not taxable, PPF is also not taxable. But in case of RPF, recognized provident fund, employer cannot be contributed more than 12% of the salary of the employee, and if he contribute more than 12%, then the excess contribution is taxable under the salary. Employee contribution, there is no foundation on employees contribution, but you will get a deduction under section 80C. Interest, that interest is not taxable in SPF, not taxable in URPF, not taxable in PPF. In case of RPF, that the interest should not be more than 9.5%. If any interest is given by the company is more than 9.5%, then the excess interest is taxable. lump sum withdrawal. In SPF, lump sum withdrawal not taxable. In RPF, not taxable. In URPF, it is no depends on condition, and in PPF, it is not taxable. Now there are certain deductions in the salary. That one is the standard deduction, that is 40,000 per month or amount of gross salary. Second is entertainment allowance. Entertainment allowance deduction is given to government employee only. If in case of private employee there is no as such entertainment allowance deduction. But in case of government employee, the deduction is to be made as actual entertainment allowance. Second is 5,000 maximum limit or 20% of basic salary. Whatever is minimum is exempted. Employment tax as whatever paid is can be deducted. Now here is a meaning of salary for different purposes. For gratuity basic plus DA, for gratuity not covered under the gratuity basic DA commission also. Leave encashment basic DA commission, voluntary retirement basic DA commission. For regular benefits, rent-free accommodation basic DA, bonus, fees, any other taxable allowance, monetary benefits, specified basic DA, bonus, fees, entertainment basic only, any other case basic DA commission likewise. These are some special allowances provided by the organizations, like for hill area, for special tribal area, for especially compensatory allowances for high altitude areas. Say for example, if you are promoted to, or if you are residing in a Himachal area, Arunachal, Jammu Kashmir, 800 per month special allowances is provided to employee by the company side. Siachen area is then the 7,000 per month. Then if the situation is located at a height of 1000 meters or above, then 300 per month. Any special Andaman Nicobar 1300 per month. Continent shell, then it is 1100 per month. Specified area of Arunachal Pradesh, Nagaland 1050 per month. Specified areas of an Aizawl district 750. Then it is like some specific table is there. So there's a tribal area, scheduled area, and then the allowance is 200 per month. If there's a ground allowance is 800 per month. Compensatory field area allowance then 2600 per month. Likewise, you can get uh, the deductions, or you can get special allowances also. So here I am ending the income from salary chapter, and if you have any doubt, then you can mail me on avinash.932984844@gmail.com, or you can call me on 95848 16373. Thank you.